Union Finance Minister Nirmala Sitharaman has announced that the standard deduction for salaried employees under the new tax regime has been increased from 50,000 to 75,000. For pensioners, the deduction on family pension has been raised from 15,000 to 25,000. But the biggest change has come in the form of tax slab revisions. The new tax regime has once again been revamped with the hope that more and more taxpayers switch to it. Now, as per the revised new tax regime, income up to rupees 3 lakh will not be taxable, similar to how it was before. The difference will then be seen in the next slab, because earlier those earning between 3 and 6 lakh had to pay 5% tax. Now it's 3 and 7 lakh. Further on, tax on the 7 to 10 lakh range is 10%. 12 to 15 is 20%, and 15 lakh and above is 30%. The deduction of employees' expenditure towards the national pension system has been increased from 10% to 14% of salary. A new deduction of up to 14% of salary has also been introduced for employers contributing to the NPS under the new tax regime. Now, these changes are expected to provide substantial tax relief to salaried individuals and pensioners, while also incentivizing employers to contribute more towards their employees' retirement savings. But here is now the big explainer that we have for you. We have collated the figures of the old tax regime, the new tax regime till this year, and the new tax regime from this budget onwards, and what the difference it will be for you on each of these three tax regimes. The first important thing we have to keep in mind is that we are looking at taxable income. Remember, you do not pay tax on your entire income. You pay it on your taxable income with certain deductions, such as in the form of certain allowances or other aspects like ESOPs and all, which are not included in taxable income. So your taxable income is what matters in this place here. Now, first and foremost, there's something known as standard deduction, in which the government deducts a certain amount from your taxable income and then calculates tax on that. Now, under the old tax regime, you were having 50,000 deducted from your taxable income. So if your taxable income was 6 lakh, you were paying tax on 5.5 lakhs. That was the same in the new tax regime as well. But this time, it has, in the new tax regime, in the revised one, it has now increased to 75%. So if your taxable income for, say, 5 lakh an annum, you will now pay tax calculated at only 7 lakh minus 5 lakh minus 75,000. That is 4.25 lakhs. That's the first big change. Let's now move on to the next important point, which is, of course, where the tax slabs start here. Now, of course, the baseline is that if you earn if you earn salaries up to 2.5 lakhs per annum, you're not paying any tax across any of the tax regimes. Differences start from the next slab onwards. If we continue, we look at what happens in that next tax bracket, which comes from 2.5 to 3 lakhs. Now, here the first difference starts coming in. If you're in the old tax regime, you pay a 5% tax here. But in the new tax regime, both revised and earlier, you are paying 0 tax. The next tax bracket is that from 3 lakh onwards to 5 lakhs here. And here, this is again, it's a constant across. If you earn anytime, if your taxable income is between 3 to 5 lakhs, you're paying 5% across all tax regimes. The next tax slab, and this is where things get quite interesting here. If you move from 5 to 6 lakh, there's a huge difference here. In the old tax, you pay 20% tax on taxable income. In the new tax regimes, both previous and revised, you're paying 5%. However, if you notice, we have an asterisk marks here with the old tax regime. The reason that tax rates are higher in the old tax regime is because you have about several tax-saving instruments included in it, stuff like Section 80C, something like National Pension Scheme. So you can get up to 2 lakh of your taxable income exempted from it by investing under Section 80C and Section 80D. And as a result, your taxable income drops, and on that taxable income, you pay 20%. However, this is what was from 6 to 7 lakhs. Let's go on to the next important tax bracket, or the next important tax range, that is from 7 lakhs to 7.5 lakhs here. Again, you see a slight deviation, 20% you're still paying in the old tax regime, but in the new tax regimes, if your taxable income is in this range, you're paying up to 10%. Quickly, let's move on to the next one, which is from 7.5 lakhs to 9 lakhs, if I'm not mistaken, to 7.5 to 10 lakhs here. Here again, 20% is what you pay in the old tax regime. That is unchanged. But the big change in today's announcement is that if you're in the new tax regime, and this is the amount you pay as taxable income, your tax has come down from 15% to 10%. People whose taxable income is in this bracket, they are the biggest beneficiaries from today's key announcement here. Let's move on to the next tax slab here, which is from 10 to 12 lakhs here. And there again, there is no difference in the new tax regimes, but again, there's a sizable difference with the tax percent of the old tax regime, which is 30% to 15%. And things start stabilizing here. The next tax bracket, which is from 12 lakh to 15 lakh, there you have 30% in the old tax regime, but 20% in the new tax regime across both revised and the current ones. And finally, if your taxable income is more than 15 lakhs, then you pay the same amount of tax across all three tax regimes here. However, as we told you, under the old tax regime, you get to reduce your taxable income significantly by including several tax-saving instruments. So the bottom line still is that if you're earning about less than 6 lakh as taxable income, it's better for you to go to the new tax regime. If you're earning anything more than 12 or 15 lakh per annum, then it is much easier, it's much more beneficial for you to stay to the old tax regime. Anything in the intermediary, we'd recommend that you consult your CA, because it depends on a case-to-case basis. But yes, the biggest takeaway coming from today is that if you are a salary taxpayer in the 6 to 10 lakh bracket, then it's now become a lot more advantageous for you to shift to the new tax regime. This is a summation, but let's listen in to what the finance minister said in a budget announcement.
Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows: 0 to 3 lakh rupees, nil; 3 to 7 lakh rupees, 5%; 7 to 10 lakh rupees, 10%; 10 to 12 lakh rupees, 15%; 12 to 15 lakh rupees, 20%; and above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes, will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually.
Now, the big takeaway, of course, from the Modi government 3.0's budget also is that you will have employment-linked incentives. But what are these incentives, also known as ELIs? Now, 1 month's wage will be given as an incentive for first-time employees. This will be in the form of Provident Fund contributions up to 15,000 rupees. Under this will be given to first-time employees for a limit of a 1 lakh salary per month, and this is likely to benefit over 2 lakh employees. There's also a big announcement on internships that have been made to provide on-job training opportunities to the youth. The program will target 1 crore young individuals over the next 5 years in 500 top companies across India. Each intern will receive a monthly stipend of rupees 5,000 to ensure they get exposure to a real-life work environment, apart from a one-time assistance of 6,000 rupees. The budget also outlines Working Women's Hostel to boost the participation of women in the workplace.
Priority 2, employment and skilling. Employment-linked incentive. Our government will implement following 3 schemes for employment-linked incentive as part of the Prime Minister's package. Scheme A, first timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths.
Those were the big developments that came in terms of if you're a salaried individual, if you're a job seeker here. And we are now going to continue to focus on the key changes that we explained in terms of the tax regime. And we're going to put that across to my guest joining us, Gagan Kumar, tax expert. We have Vaibhav Tambe, founder and CEO of Transbank. We have Sanjay Ghare, CEO of Verbotech, and also Jagdish Shettigar, senior economist as well. But I'll first come to you, Gagan Kumar. Mr. Gagan Kumar, the big development, the big talking point for all of yours today are the tax slabs and the revisions in that. Now, I've just tried my very best to try and put out for viewers what the difference is in the new tax, both the old new tax and the new tax versus the old tax regime. It's a bit complicated, but essentially, can you explain to our viewers here that who are the ones who should stick on to the old tax regime? Who are the ones who should now look at switching to the new tax regime?
Thanks a lot. I think you very succinctly explained and very elaborately explained the difference between the new and old tax regime. But what it is emerging is, and as you also pointed out, that it would be depending on each case. But largely, people falling within the bracket or having a taxable income of about 10 lakhs, I think that the new tax regime is a winner, undoubtedly. The saving is phenomenal, and government has also given the data wherein they have indicated that 2/3 of the taxpayers have already moved to the new tax regime. So which indicates that by and large, people are finding new tax regime to be more efficient in terms of saving.
Okay, so you are saying, sir, that those who earn around the 10 to 12 lakh mark as taxable income, once again, we are very specifying that taxable income has to be around the 10 to 12 lakh mark. It's better for them to now switch from the old tax regime to the new tax regime. The key point is that there are a lot of people who believe that they have, those who were taking on to the old tax regime, they were also expecting some concessions in the form of an increase in the standard deduction or an increase in the tax slabs, or at least increase in the Section 80C exemption limit as well, which improves the amount of money you can invest and thus therefore take out from your taxable income. But it seems after today, the message is very clear, Gagan Kumar, that the government's focus is to incentivize the new tax regime so as to stop people from relying on the traditional forms of tax saving and investment methods, now try and focus more on having more money at their disposal.
Absolutely. And if I may also add that the focus essentially is promoting self-employment rather than the salaried employment. Because most of the tax proposals are indicating that it's the startup culture which is being promoted by the government, that self-employment. And if you look at the various other amendments which are proposed in the budget, either in terms of compliances and more importantly, the abolition of angel tax, the much debated and much heated and much hated. All these sections do indicate that there is more to gain when you get into self-employment, and of course, undoubtedly, the lower strata of the people which are in the jobs, they will certainly be benefiting more by moving to the new tax regime. Yeah.
All right, stay on with us. Stay on with us, Gagan. Vaibhav Tambe, what is your first response and your first assessment of this budget in terms of what it does for the budding entrepreneurs, what it does for the salary growers, what it does for those who are looking to also invest a bit more and up their game in terms of the stock market game or in terms of mutual funds, because there's been a lot of speculation and a lot of heartburn also over the increase term capital gains and the short term capital gains taxes as well, because that means that investing in mutual funds will get a bit dearer when it comes to liquidating them.
Yeah, look, first of all, this budget actually doesn't only recognize, the usual segments, right? It actually expands the definition. It talks about the MSMEs a lot. It talks about rural sector a lot. And from the entrepreneurs or from the startups perspective, one of the biggest issue we've been grappling with was the angel tax, right? It's not that people are not really happy with the taxation and all, but I think the whole structure around it was a big confusion for a lot of investors, right? And I think that probably will unlock a lot of input or a lot of investments into startup ecosystem, be it fintechs or be it any other investments. And more than that, I think MSMEs, if you define the MSMEs and if you've seen the emphasis or the stress on MSMEs, I think there are a lot of things which was said by the finance minister, which are very crucial from the future of this nation and the way we are planning to build this toward 2047, right? It talked about the change in credit assessment, right? Till now we had seen the credit assessment basis, some collateral or maybe some security. Now they want, actually government is looking for the technology enhancements where they can assess the cash flows. It's a massive step for us. Of course, Mudra loan is another initiative where it's now expanded to 20 lakhs. Credit guarantee scheme. So I think what's going to happen is more and more avenues are going to be unlocked for investors. It's not that you have a certain specified or certain specific investments which we traditionally have been looked at. So I think my message or my summary from the budget would be that the definition or the entire horizon is expanded now, and we should have more and more investments across all different type of asset classes. And I think the SIDBI branches increasing in this cluster and all is also helping these other segments to grow.
All right. The other, Sanjay Ghare, the other big headline that was coming out from this budget is the entire concept of employment-linked incentives. Apparently, the government was quite happy with the response that performance-linked incentives got. For our viewers, can you break down what are employment-linked incentives and what does it mean for employers and job creators?
I think, if you look at today's budget, a couple of great things are done, which are good to create the new employments. Okay. So as an example, and I'll just, kind of name the few. So the most important one is the EPFO contribution of up to 3,000 for all the new PF registrations, which will be done after on. That would be reimbursed by government completely. So this will, motivate employers to kind of convert contractors and consultants to employees, in a lot of cases. Second is, lot of times when you hire people, some time, typically goes into training the people. The first salary, up to 15,000 is now reimbursed by government. The other part is also about the interns, where up to 5,000 per month as a stipend would be sponsored by government, and it would be done by top funded companies. I slightly disagree with the approach of top funded companies because typically large companies have their goals and not every large company has enough bandwidth to do share about this. But I think this will create a lot of internships and people either get in the same companies or they might get job in other companies when they get trained for it.
Okay.
So if I look at, all these opportunities, these are great. And even for creating the funds for that, as an example for internships, companies can use up to 10% of that, CSR fund. So, all these things are really, really great when it comes to creating the new employments. Of course, the angel tax removal, everyone mentioned it and I would mention it too. It's one of the best thing, which has been a pain since I think 2012 since it got introduced. So I think all of these things would help in creating new employments.
Okay.
And
Sanjay, Is it a response to one of the very key headlines that came out yesterday from the economic survey, in which the government very squarely put the onus of job creation on the private sector here? Because one of the key developments that came out from the economic survey was that the government felt that the private sector's profits had quadrupled, and they were way ahead of the initial recovery or the initial problems that happened post pandemic. Yet their rate of job creation was not in proportion with the amount of profits the non-financial private sector was making here. Is this an important step you feel towards correcting that and giving more incentives to the private sector to try and become more better job creators and create more opportunities?
Yeah, I think I would not say it is just a response to the survey, but I think it has been overall. If you look at the NDA government and their promises in the past, the biggest thing has been about the job creation, and I think not only these
Yeah.
things. If you look at the initiatives which are taken for job creations, these are just the direct initiatives to incentivize employers. But if you look at the other incentives, I'll give an example. So I come from a travel and tourism background. If you look at all the things which are done in the last 2 years, the initiatives of railway and the Ayodhya and all those, this budget also had a very significant thing, which is about Bihar's tourism development. So Mahabodhi temple or
Yes.
Vishnupat temple, the corridor would be developed similar to like Kashi Vishwanath temple, or even Nalanda where the university is built now, is getting developed as a tourist center. So if you see, these are the indirect initiatives or very strategic where a lot of jobs would be created. So I think, overall, tactical things is to empower, employers immediately, as well as strategy to support them with the infrastructure, to support them with the, all the logistics support, infrastructure, safety. I think the government has been building on that, especially if I look at tourism. Every year, the initiatives are just kind of building
Okay.
on top of what is already done and moving in the same direction. But yes, there is definitely a very clear focus towards creating new jobs here.
Okay. However, Tambe, would you agree with that view that this is the first step and a welcome step towards encouraging corporate India to be better and more efficient job creators, and also encouraging job seekers to look at jobs with these top companies?
Oh, yeah, absolutely. I think the way we have seen the entire speech, probably every sector it talked about, there is definite emphasis on creating jobs. Of course, it talks about internship and few other transactional things. But I think the most important part is each and every stimuli which has been incentivized. You can take small examples like the rural infrastructure, talking about 2.66 lakh crore, right? Now this doesn't only talk about a mere speech, right? It talks about the actual implementation of digital public infrastructure, DPI, right? It actually talking about capturing the supply chain finance.
Yeah.
So I think the motive as well as the action plan is very clear, right? It would be more inclusive in terms of
Okay.
getting the employment, or like probably having more and more self-employed groups, because I think the more you emphasize these rural segments, the MSME segments, it's not 1 lakh or 2 lakh entrepreneurs, right? It's about probably 40 crore entrepreneurs, right?
Yeah.
And the rural infrastructure will cover the rest 60 crore entrepreneurs, right? So probably it's actually the inclusive vision which actually has never been explained so well, or I think the kind of overall speed it will give to the economy. I think this is very exciting part of the budget, which I
Yeah.
probably we of course talk a lot about our individual taxes and all, but that's one of the most exciting part from the budget.
Yeah. Yeah, yeah, absolutely. Let me go back to Gagan Kumar and let's put those graphics once again on the tax regime, the new revised tax regime is and how it compares to the previous tax regime as well. Gagan Kumar, the two questions which I'm getting in from our viewers at this point is, A, because we're in a unique situation because this is not a regular budget. This is a budget which has come in July after already having a interim budget in Feb, and there's going to be another budget coming up in 7 to 8 months later on at this point. The first question which a lot of viewers have, which you will perhaps be best positioned to clear, is that can they switch, if they can, to a new tax regime now within the financial year? Do they have to wait for the onset of the next financial year?
Okay, so essentially all the tax provision, unless expressly stated so, are effective from 1st April of the subsequent year. So whatever would be the law as on the 1st April 2025, that would be applicable. I think that addresses the question.
Okay.
So
they can't switch now. The other thing, go on.
So of course, the question of switching would arise next year, not this year. Because this year's return in any case had to be filed before 31st of July. And that relates to the previous financial year. So this financial year's return will be filed in the next July. And that is the time when they will have to really question themselves whether the new regime is more beneficial or the old regime is beneficial. So that, in other words, the
other question which you are getting, Gagan Kumar,
next year.
Okay, so they can only switch next year if they want to. The other question which we are getting is that there's been a lot of uproar in terms of what the salaried middle class is expecting here, because there is a hugely significant population of our viewers, at least in the urban middle class, who are above the 15 lakh bracket here. And number one, there are questions coming in: is it fair to tax someone who's earning 15 lakhs a annum at the same rate as someone who's earning 1.5 CR an annum, given the fact that 15 lakhs means essentially a monthly CTC of 1.25 lakhs, which in a metropolitan city really leaves very little safe scope for savings at this point. For those viewers at this point, could you break it down as to what are the benefits they may still get from the new tax regime if they are as part of it? Because to begin with, a lot of people believe that if it's 30%, that is 30% on 15 lakhs or 13% on 18 lakhs, for instance. Not the fact it is actually 13% on the amount they have above 15 lakhs. And the other slabs still apply to them till that range. So you have zero tax on the first 3 lakhs of your salary, then 5% on the next 2 lakhs and so on. So what are the benefits, if any, they can still avail for those of our viewers who earn more than 15 lakhs an annum but are still in the new tax regime?
Not much benefit. Of course, if it is beyond 15 lakhs, then of course you are as good as paying tax equivalent to someone who is earning, having an income of 1.5 crore. So there is no additional benefit. As far as the rate is concerned, it is progressive. So the moment you grow from 5% to 10%, it is the differential amount which is taxable at the higher rate. So just to give an example, if it is 3 to 7 lakhs, so that 4 lakh is taxable at the rate of 5%. And when it goes from 7 to 10, the additional 3 lakhs is 10% at 10%. So it's not the entire slab rate changes, it is progressive rate of taxation. But once you hit the highest tax slab rate, there's nothing much to be done.
Okay. On that note, we are going to head in for a short break, but thank you so much, Gagan Kumar, Vaibhav Tambe, and Sanjay Gare, for joining us with your views and perspectives